Hey, what's going on? Quick bias video for this upcoming week. We've got about, I don't know, a little under 4.5 hours before market opens today. Um, for the week, I'm actually looking for bullish price. Any interim, the very short term, maybe today. I know tomorrow being a holiday, and maybe Tuesday, we may see a little bit of a pullback. So just looking at it from a structural bias and basis, we had basically this breakdown in price last week, last Wednesday and Thursday. So this was going to be a low. You could look at this as a low as well, but basically, both of these moves occurred from here, right? So as you can see, Thursday AM buy side liquidity was created by sweeping out this level. So with this short taking out this low, this basically gave us a structural narrative of this sell side liquidity low. This point, this was actually Wednesday. That was a and this is electronic trade hours. So this is actually 6 p.m. Wednesday. If we wanted to go back to more of a regular trade hour, this would be essentially the low put in a regular trade hour here. But the moral is this is the low and this is going to be our high. And again, you could say, well, why? This is on Wednesday. Thursday AM took out this intermediary buy side liquidity. Now there is, and there continue to be different levels that are here. However, when looking at the structural range, if we're looking at the immediate structural range is the sell side to this buy side. Right now we're inside of that. Friday actually saw a little bit of what some people will call like a whipsaw, but when you look at price, it's really a little bit of a consolidation. We were in the last week of the month. We're coming into the first week of September, and then as you well know, this upcoming Friday is going to be NFP. So maybe a little bit of a tighter constraint, but as long as you're looking for whatever whichever side of this range is taken out, it's going to give you a little bit more of a probabilistic expectation of what area price may be either running to, or where it's trying to pair, or where it's trying to you know reach an inefficiency for price to go into its given direction, right? So for me, within this range, as I said, like on the weekly, I haven't looked at yet, but I am bullish just from how the market closed on Friday, and then just looking at the overall structural range, which I'll take you to on a weekly here as well. So today's open, I may be looking at a very short term or very intermediary short before continuation long. It looks like we were basically running sell side liquidity last week. So usually the sell side liquidity runs or the internal range liquidity runs will lead to some buy stops, buy side liquidity, and ultimately, well, highs run instead of lows. So we do still have these two areas that I actually have annotated on my chart, which is basically sell side back here from August the 14th. This one is actually, as I said, Wednesday, but that's a electronic trade hour level. This 4 hour sell side I can actually take off because that's actually been cleared. However, however, this would be. Well, let me take that off. This I would actually move this current 4 hour down here. So I'll just stick it out here right now. I don't want to convolute those levels, but this would be a current 4 hour level for low because we haven't had price open, right? If you were looking for a more intermediary, it would be this low here where I've got just basically the sell side liquidity where I'm scrolling here. So that could technically and would technically be the most recent low. Ultimately and subsequently, this Thursday buy side would ultimately be the short term 4 hour high. So if price were to open today on a weekly, my 4 hour buy side would be where you see this Thursday 829 buy side liquidity, and it the low should be the sell side liquidity low. I'm looking, and the reason that I have my 4 hour down here is because I'm looking for a little bit of a longer play couple of reasons behind that. One, again, the end of this week is going to be NFP, so I'm looking to see what the reaction or response is. Those types of events, CPI, FOMC, those are hardly ever any very small or intermediary moves unless there's, say, we've got CPI and FOMC in the same week. Those are the only times when you've got compounded economic data that's coming out. That's the only time that you'll see a restrictive or intermediary targets that'll be cleared before a long-term move. So just interested to see what we get out of NFP this upcoming week. So that's why that's there. Just being mindful that I obviously do have some sell side liquidity levels contained within. Now, now that that's out of the way, this video is going to be like super short. You guys are going to be like, damn, he's been working on it. Yeah, realize I don't have to do as much talking and whatnot from week to week. So structurally, so let's just look at a structural bias right now. Okay, so if we were looking at this on a 4 hour structurally, again, same kind of context. We be looking at the same thing. So the break of this low came from up here. Okay, this was our low that was put in. So because this was the low, ultimately you're saying, okay, well, where did that come from? It came from up here, right? So at that moment, this low, you would basically be looking to get back up here. So you'd be looking for longs. You ultimately you get that, but you don't get it before this clear, right? So you get liquidity cleared here, but in the midst of getting this original break short, this liquidity cleared and this move back inside, this is one of the reasons why I say, I'm looking for longs, but we could get a little intermediary or very short term retracement before the long. Price has already taken basically an internal liquidity or internal range liquidity. It's also reached back into other areas of interest. This could be looked at as an order block if that's how you trade. This is also basically you look at this as a inefficiency as well for price. So whatever style or whatever you would call this movement, basically there is an inefficiency in price here. So price has come back, it's paired off orders, it's moved away. So following this back up, we do have another inefficiency in price. This could be a trigger. However, I don't really want to get into and make this like super long as to why I think this is where this is. I will just simply say this. I think that this may become an interesting level either Monday or Tuesday of this week during an AM session, or it could literally, depending, upon how price moves throughout the week, this may be some kind of a trigger or some type of a target as it relates to NFP or anything else that may come up that we're unaware of that's not necessarily on the economic calendar. But that being the case, we did have this liquidity taken out. This is ultimately the range. This move back inside is also into fair value for price. So we had inefficiency here as well with the fair value gap. But if you notice that the price at no point wanted to stay anywhere inside once it came in, it immediately ran away. It rejected. It came back inside, rejected again. So again, structural narrative. The structural narrative is this. This is a high, obviously. This is now an intermediary low. And I know for some that might be a little hard to grasp. But if you can see, I've even annotated it here on my chart. That's a sell side liquidity point from Thursday. This is also a buy side liquidity. Why is this buy side liquidity? Because once we had this move back short, okay, and I said price didn't really want to stay in here. It did not. Price moved back in, and the irony in it is that it didn't immediately go back up and take out this high. It literally just started to create a range in here. And it made basically another push, but didn't clear this low. So yeah, I just marked this off because sometimes, every once in a while, you'll get the very short-term liquidations of moves back inside. It'll range back across, and then eventually it'll gather or collect or basically accumulate enough liquidity to literally run the intermediary sides to then accumulate again to run a little bit, to run the major buy and sell side liquidity point. So that is ultimately why I marked these off. So these will actually be levels that I'll be looking at to see which side gets taken first. Um, for the run up, obviously, I'd want to see the buy side taken, um, because I would then just be looking at something like maybe a Judas in some respects. But I'm not anticipating too much with the holiday on Monday. Today might just very well be range bound. The short hours that we have trading for Monday are probably going to be range bound. I think the biggest days for any type of movement are really going to be Tuesday and Wednesday, and then we'll get that slow creep and slow down come Thursday, just because of the nature of what Friday is. So that being the case, yeah, we're looking for bullish price. Take you out here to the weekly really quick, and after that, I will wrap this video up. Okay, so here we are on a weekly. Again, just looking at it structurally, and there's a reason that I keep doing this, because these are some of the more obvious things that will show up if you look at it this way. Before you get into fib retracements, before you get into levels, before you get into any of that, just look at price. Look at the structural delivery of price. So we had a high here, we had a move back short, we had basically this high taken out from here. Ultimately, this created this break, right? You had a candle wick that took that out, then you had a move back short. So again, just like we were looking at on the 4 hour, intermediary low sitting here. Very next candle mitigated, or came back in, manipulated here, move back above. So we can keep that same level, or you could keep the manipulation low. Doesn't matter. Either one, fine. And then price just kind of runs, comes back in here. You could say the same thing, takes out, makes a high, trades back in, another intermediary low, and then subsequently makes this high. And then once it makes this high, it clears. And if there's any doubt, right? If you look at structure, and I'm guilty of doing this sometimes too. If you're ever wondering if a level was actually looked upon as a structural high or low, you can always look at mitigation before and after. What does that mean? That means that when this price moves back through this low, right, and it closes, the next candle when it opens it, it doesn't have to be the next candle. Sometimes structure will take a little bit of time to play out, and then you will see it later on. But when this candle opens, it wicks back up and through, right? But when it does that, if you look back across to the last candle that broke structure long, it's this bearish candle. It's this bearish doji. It trades back into that bearish doji. Now, that's probably going to be the limit in terms of what I say about that. Not because I don't know anymore, but because we're going to keep this video short and don't want to go into that. All right. So price moves short again, closes, comes back up inside, right? Doesn't want to go any higher, pushes down, and then what does it do? It pushes through this intermediary low. Okay, great. But it closes inside. This candle opens and comes all the way down, and it's manipulation, and it clears out this low. So if I was looking at this high, this low, and then this took this high out, my range would have been from this low to this high. This has been taken out, right? So this low was taken out. Where would I be looking for price to get back to? This high. So I'd be ultimately looking for this high to be taken out. Thus, why my bias this week is bullish. And yeah, that's about that. So hope you got some enjoyment. Not obviously financial advice, for educational purposes only. Not a financial advisor. Everything here is just educational and informational. So be safe. Trade only what you could afford to lose. Have fun. Enjoy your weekend. Stay safe with the weekend. And I'll see you guys next week.